Hello, everybody. Welcome back to another episode of the Market Close. We are here today, Thursday, September 19th, 3:47 p.m. And we've got a market to close out. Got a lot of things to talk about, a lot of things to discuss, a variety of things going on in the broader global capital equity markets. It was a green day, and I believe it's going to close out to be a relatively green day. There are certain stocks that are not as green as they were in the morning, which is fair. I mean, it's just kind of some stocks have run up pretty aggressively all week. But if you take a look at the S&P 500, 571.69, up almost 2% on the day. Now, 2% equivocates to $10 on the index, which is why going up even 1 or 2% or 0.5% on the day for these indices really does matter. And you got the S&P 500 right here hitting a new all-time high. If we close in the next 12 minutes at 572, which it's kind of possible, about 30 cents away, it would be pretty incredible to see. On top of that, you got Bitcoin, 63,550. Bitcoin has been absolutely incredible this morning as well. I want to talk about a lot of different sort of bull, bear, macro cases I've been exploring throughout the day since the market opened, and kind of give some analysis on everything going on. But Bitcoin's been a big winner. S&P's been a big winner. And then Tesla has been the third largest winner of the day, 243, up 7%. The catalysts for Tesla are pretty obvious in terms of the next couple weeks, and closing above 235 from a technical perspective. Jason and I were talking about that on the Tuesday market close. That really matters. Closing above 235, it does look like, barring anything happening in the next 12 minutes, it will close above 235. And those were some of the main winners. And then you got Meta, who I would say is the fourth big winner of the day, closing, well, not closing, but almost closing at a 52-week high. Definitely at an all-time high here at 562 at the top right now at 561. 1.42 trillion, 26 forward PE. You could argue 26 forward PE is a little stretched, but given Meta's growth, you could argue, hey, it's actually relatively cheap compared to some of the other Max 7 names. Nvidia's at a 40 forward PE. So you've got Meta here at 561. Nvidia right here up about 4.6% on the day. Berkshire Hathaway up about 0.5%. Carnival Cruise up 1.82%. You had Robinhood that is now turning red, down about 0.76% on the day, 22.78. So it's funny, right? Like, I basically risk mitigated on Robinhood at this price a couple days ago. And, if I waited till today morning, I would have got like 23.50 or something. So it's just, it's so... you kind of can never time this stuff, right? Whether it goes up or down, it's just when you have an opportunity that's better than the previous months of opportunities, given that Hood was down heavy in August, that's when sometimes you might have to mitigate some risk. So why is Robinhood down? Honestly, not fully sure. Bitcoin's up, S&P's up, Robinhood's down. I think some people are just taking profits. At the end of the day, Robinhood is a individual stock and people are probably taking profits on it. But a close above 22.50 to me is bullish. And then, the Q3 earnings and the Hood Summit, all that stuff should be good for Robinhood. They did officially finalize a partnership with the Memphis Grizzlies to be the jersey sponsor. That's better than an arena sponsor, in my opinion, because arena sponsor is probably too much money. But being a jersey patch, I don't love it. I don't hate it. It's just, another thing to get them top line brand awareness. So that's what they had today as well. Another reason they may be down is because fintech took a little bit of a decline over the past couple of hours. So SoFi was at 840 at one point. Now SoFi's at 819. The only fintech that's been really running today and has done amazing is this bad boy right here. PayPal almost, it touched $78 today. Let's see if it can close at $78. It touched $78.25 on the top today. As you can see, even from the top, it is down, although it's up 6% on the day. So fintech towards the end of the day, taking a little bit of a decline. Affirm's up 2% on the day. SoFi again up 1%. Square up 2.43%. And then Coinbase up 2.9% because Bitcoin is up. You would think Coinbase would be up a little bit more, but again, because it's in that fintech category, declining a little bit with some of the other fintechs. Meta right here at 560. And then you got Palantir. Palantir did hit 37.40 today, 37. Yeah, basically 37.40 at the top, 42. 37.42 was the 52-week high. Now at 36.76. Can we close at 37? That would be awesome. If we do close at 37, psychologically, that would be really important. We haven't closed above that level in 3 years. But a third consecutive close above 36, I don't think would be the worst thing in the world. And of course, we hit a new 52-week high on Robinhood, or not on Robinhood, on Palantir, the day after Jim Cramer says that it is not a real company. So, that you kind of can't bet against Palantir the day after that happens. And so that's what we got right now in the context of Palantir. Meet Kevin did not flip. For those that are saying he flipped, I saw he uploaded a video that is titled Flip. I actually listened to it. because I'm very curious about, him, given he's been super bearish. I want to know if he does flip. He did not flip in the video. It's funny because if you watch the end of the video, it's like, again, of course, click big title to try to get you to see if he's flipping. And then by the end of the video, he's like, I know I sound like a clown, but like it's really bearish. And the logic behind him being really bearish, in between him pumping the coupon code that is expiring at 12 p.m. today, is that in 2007, we cut rates just like we did now by 50 basis points. And then in the preceding, I think it was 6 weeks, the NASDAQ goes up by 11%, and then the S&P falls by 50%. So he's using 2007 as his like base to make this argument. I'm not saying that can't happen again, but here's I was going to tweet a post about this. I actually wrote it up, but I haven't tweeted it yet. The argument I was going to make is there was a housing bubble and mortgages were being given to like strippers, right? In 2008. If anyone saw The Big Short, you remember how that played out. And that movie did a really good job showing the carelessness by which mortgages were given out and that housing bubble collapsed. For 2007, for things to happen like this as well, or for 2024 to reflect 2007, we would need some type of bubble. SPACs popped already. IPOs aren't happening. There's barely any that are going public. Stripe is going to go public, and they're going to do very well because Stripe is an amazing company. Bill Ackman's fund that would just go public for the hell of going public, that couldn't go public because there wasn't liquidity. So the only bubble that's left is AI. And I think the AI bubble, we've talked about it a lot on this channel. I don't think there is a massive AI bubble. I think the cash flows are good. The net incomes are good. The Max 7 are producing real revenues. FSD is a real thing. And the AI startups that are getting funded are starting to show serious growth. OpenAI at 200 million weekly active users. So I think at the end of the day, it's just a harder argument to make for a bubble popping. That isn't to say that we can't have a lot of weakness. We have an election coming up. September is the worst time of the year, the last 2 weeks. There's a lot of arguments for why we can't see weakness. To say there's a catastrophic crash coming up, maybe. It's just, I think you need something to pop, and I don't know what bubbles underlying the broader economy that would cause that pop. IWM right here, up 1.87% on the day. Palantir at 36.79, and then QQQ was up, I think, 2%. Yeah, 2.49% of the day, hit a top of 484 now at 483. We also have money market fund updates. So, Fed cut rates by 50 basis points over the past 5 months. About $200 billion has flowed into money market funds. Well, what happens today, less than 24 hours after the rates are cut by 50 bips? Decreased by 20 billion. Total money market fund assets decreased by 20.02 billion to 6.3 trillion for the week ended Wednesday, September 18th. That means yesterday, or a couple days before that, basically in the past 7 days since yesterday, people decided to take out some money. Now, look, 20 billion is not a massive decrease given the fact that there's still 6.3 trillion in those money market funds, but it's kind of going according to plan that if you're going to get a less yield inside of the, a lot of people were questioning this thesis of, people were not going to take money out of money market funds because you're getting a little bit of a less yield. And it's like, I agree. There's an argument for a lot of money that stays there, but there's also an argument for a decent chunk of money, even if it's a couple $100 billion, which would be like, even it's like diversified throughout the S&P, the QQQ, the NASDAQ, the IWM, crypto, Bitcoin, like even that money just entering into other risk on assets, that is obviously bullish. I mean, that's definitely not bearish. So even if it's not trillions of dollars leaving, which by the way, money market funds are only supposed to have about 3 trillion on average. Right now, we're double that. So you would imagine if just 500 billion, again, even a couple $100 billion, and then in the Super Bowl case, more than $1 trillion leaves, that money is going to go somewhere, and that money is going to go into other assets. Now, maybe that can inflate other assets. Maybe that puts a lot of money into companies that don't really deserve those types of valuations. But the point is that money would be leaving, and today we saw the official first sign of that money leaving. Again, for those that are a little unfamiliar with money market funds, these are these are funds that give you a risk-free rate of return, invested in a conglomerate of different assets, including treasury bills. And if you had $2 million, you could earn an extra 100,000 per year with zero risk outside of the opportunity cost. Now, what's funny about this is that the opportunity cost of not being invested in the market has been pretty strong. For the S&P, it's going to end, I think, at 570. It'll be about 20% was your opportunity cost compared to 5% in money market funds. But if you didn't care about keeping up with the market, 5% on 2 million or 3 million or even 100,000 is not the worst thing in the world. And so if that does decrease, we're going to see how that implicates the broader rest of the financial ecosystem. We got the market closing in about 4 minutes. Again, Bitcoin having a phenomenal day right here in this $63,000 range. All the Bitcoin proxies have been getting some benefit. from this as well. 1.8% up on the day. At one point, it was 63,885, trying to make a run for 64,000, but since then has sold off. S&P is at 570 year to date. If we take a look at the S&P, and then we have a bunch of other headlines that we will talk about. Yeah, wow, S&P's up 20.89%. So if we close even at that 569, 568 range, I think we get close to, I think we get a full 20% year-to-date close on the S&P. We started January 2nd, 472. We went all the way up to 513. And then on April 18th, we came down to 499. Then we went all the way up to 565 on July 16th. Then on August 7th, we came all the way down to 507. And now today we are back here at this 570 range, finding new all-time highs for the S&P 500. So here's my question to everyone as we get into the market close for 3 minutes. Did you take some profits? Did you take some profits? As I say that, Vibob says he took some profits. Vibob says, I saw my Palantir at 37 today. The valuation was a bit too high. I will buy into future dips. Sorry for the sell. I was very high on the gains. First of all, Vibob, do never apologize for selling. Like, a profit is a profit. A win is a win. You take your money. You got money out of assets that most people in the world do not even know exist. That is a win no matter how much money you make. And B, you got to take some money. I mean, you made some money. That's good. Like, there's nothing to apologize about. If you feel the valuation is too high, that is a fair point to take some profits, and you took some profits. So let me know in the chat who sold, who took some profits. If you took profits on certain things, you guys know my positioning. A couple days ago, took out my initial capital from the Robinhood options. And since then, kind of just holding on to that cash. I asked this on Twitter as well. There was a decent amount of people that didn't sell, and that's what I expected. Usually, on these green days, people don't sell. They think the momentum is going to go on forever. And I think we're in a bull market. So I think we're going to keep that momentum. But obviously, if you think there's going to be some short-term volatility, you want to raise some cash to buy the dip. If you think that volatility is going to be to the downside, then you take some cash and raise some cash and sell certain stocks. So I don't think it's the worst thing in the world to hold, especially if you have a longer horizon. I also don't think it's the worst thing in the world to keep some of that cash or to take some profits. Someone added Rocket Lab. Yeah, Rocket Lab also today. It was at 7%, or sorry, it was $7. We got about a minute until the market closes, and then we had Rocket Lab here. Wow, 718 going green into the close. It was a little red a couple like a couple minutes ago. I think at like a 3:30 I checked it. It was red. Now it's green. Palantir 3680 rallying into the close. Nvidia 118 trying to get into the close. Tesla, look at that. Wow. Tesla might be trying to go for 244 on the close, up 7.35% on the day. I think even today, selling some covered calls is not the worst option. How do you handle taxes a bit? I pay them. I pay them. That's pretty much it. Like, I'm gonna have to pay some taxes. Now again, my plan with the money I took yesterday is I'm gonna shove it into my SEP IRA, which is like my solo 401k. So hopefully that'll reduce some of the burden. But taxes are taxes, dude. You can't do anything about that. So just got to be able to have enough cash to pay them. All right, here we go. Thursday, September 19th. A lot to talk about after the close. It is 4 p.m. The stock market is now closed. All right, markets are closed. 243 on Tesla. 7.34% on the day. Tesla adds about $57 billion of market cap into their company. Congrats to Tesla shareholders. This is incredible. Did Meet Kevin sell all of his Tesla? Yes. Meet Kevin has sold everything except basically money market funds and T-bills. And so that's pretty much what he's in right now. Tesla right here, 7.36% on the day. S&P ends 570. 1.69% on the day. This is the first $570 close, which is just incredible for the S&P 500. I mean, dude, a couple weeks ago, we were struggling to see this bad boy at 510, 515. Then it was stuck at 534. Remember September 6th, that fell, pretty aggressively this month on September. Yeah, 537 on September 6th. That's when Nvidia was hitting around $100. And now all the way to 570. 572 at one point on the day. Just incredible for the S&P 500. QQQ has not closed at all-time highs. Still July. So, for people saying big tech is super overvalued, in July, the Qs were at a 500, 503. So you saw this nasty 503 to 423. This was your tech decline. This is where a lot of tech stocks fell 15 to 20%. And now we got a little recovery right here up to 483. Not a bad recovery, but it's still not at that 503 level. So tech still, companies like Google, etc., trading a bit lower than where they were at the top in July. You got Nvidia. closing 3.97% on the day. You have McDonald's up a little bit on the day, 0.61%. Robinhood ends the day red, 22.81, still a good day above 22.50. And if we can hold on to these gains and really get, into the mid 20s over time with catalysts and more rate cuts and obviously stronger growth by Robinhood, then I think that's going to be important. Apple, phenomenal day, up 3.71%, 228. Apple was at 215 on Monday. So 215 to 228. I don't know if it's algorithmic. I don't know. I don't think anything has changed around the sentiment around an upgrade cycle. I think just people realize, hey, rate cuts are bullish for the market. And so that's why they ended up buying Apple. SL Green, we got 72.21 on the day. Broadcom at 167. That's up 4%. Let's look at the semis. Semis were green throughout the majority of the day. Intel ended 2%. SMCI flat on the day. AMD up 6%. NVIDIA up 4%. ASML up 5%. Broadcom up 4%. TSM up 5%. Qualcomm up 3%. ARM up 2%. Lam Research up 5%. Micron and Dell both up about 2% on the day. On the Mag 7, you had Apple up 3%, Microsoft up 2%, Google up 2%, Amazon up 2%. Wow, Amazon 190 or 189 closed. That's not too bad. Tesla led the way up 7.3, and then NVIDIA up 3.97. And then in the context of SaaS names, we also had a decent amount of green. Palantir was green by about 1%, but you had Snowflake get 3%. You had Intuit up 3.4%. Adobe got some love today after falling last week, 10%. Salesforce got up 5.39%. If you go to NVIDIA's website, you got Mark Benioff and Jensen Huang on the front page. So Salesforce is definitely using Jensen's face as much as they can. Oracle up 1.84%. Really, there was not a lot of red today. I mean, this was one of those days where it was green. And if you had stocks that benefited massively from the green, then you had a decent day as well, especially if you had Meta. Meta 562, just incredible. Meta, absolutely incredible. Yeah, I mean, look, I don't have Meta. This is one I regret, but if you have Meta, congrats. 559 close, up 4% on the day. It added 21 points, 1.4 trillion. Advertising should be a tailwind for Meta. We'll see if that plays out over the next earnings, but they're growing. Market likes them. They're doing buybacks. I forgot there is a dividend on Meta. And so with rate cuts coming down, it seems like there is broader interest, at least in some of the big tech companies that have real cash flows. Are we green for September? Yes. So let's look at all the major indices right now. And then I want to run through a bunch of different headlines in the macro and kind of see what people are thinking. So IWM for the past month so far, or in September so far, is indeed green. That's up about 2%. S&P 500 for the month is up 2%. From the beginning of September, it is indeed green by about 1.2%. And then you got the Qs that basically are the same number as green as well. Year to date, the Nasdaq's up 20.06%. Over the past year, up 30%. Over the past 6 months, 10%. Over the past month, about 0.5%, which is not bad at all. CrowdStrike as well. I mean, yeah, CrowdStrike. Again, they had their investor day. Basically told investors that they're good to go and up 4% on the day. Cybersecurity seems like it's going to get more and more important. Investors are continuing to show more and more love for CrowdStrike. FedEx earnings. Thank you for reminding me this. I forgot we had to do FedEx earnings. I forgot we have FedEx. And what else do we have today? We have another one that's important. If you're just joining, money market funds decreased by 20 billion. So that money market fund outflow has started to happen. We have Lennar and FedEx. All right, let me pull up FedEx. FedEx actually is very important. I think down 12%. That's not good. So let me pull up the FedEx results and see what we have here. All right, here we go. Here we go. All right, we got FedEx. FedEx is down. FedEx is down. This one's taking a little bit of a tumble.
13. You looking to change that call, or are you?
We are. We'd like September near term. That said, there are quite a few tailwinds right now in the market.
They're not actually reading the results. They're just showing the screen while they're doing analysis. So we'll watch that later. But let me pull up the actual results. So why is FedEx tanking? What's going on with FedEx? Let's see. FedEx down 10%. All right, that's not good. This is a pretty big company, $10 billion company. Let me know if anyone owns FedEx. That's a nasty red candle. That's not really recovering too much. Oh wow, it did hit 258. Now it's at 270. So you do have about a percentage point of recovery. Why is it down? Why dumped all the way down to its 200-day moving average? Might be a buy on that alone. FedEx has a 1.84% dividend. Palantir is worth more than FedEx on a market cap basis. So there you go. Let's pull up FedEx earnings. Let's see what they got. Did FedEx dump last time? Do you guys remember? I feel like FedEx dumped last time as well. And okay, here we go. Do we have it? Today's what? Today's September 19th. September 19th. Today's the day. Of course, it's not on their website. Why would it be on their website? Why would they actually upload it on their website? That doesn't make any sense. FDX. Okay, let's pull it up. Oh, wow. Look at this EPS miss. Holy crap. So what we got on FedEx, they dumped last time, right? Yeah, they dumped last time. So EPS on FedEx, 360 versus expectations of 459. That's $1 of misses. Not good. Revenue 21.6 billion versus 21.9. That's whatever. But the EPS miss that's aggressive. Something happened internally for them to miss that aggressively. And it might have to do with their cost restructuring, because I know they had some stuff like that they were talking about a couple months ago. But maybe that can be explained by something simple, like a goodwill impairment charge, or maybe that's something a bit more serious, and that's why the market is reacting to it right now. Quarterly results. Yeah, it's still not on their website. UPS is down on this. I would imagine UPS is down. Yep, UPS right here. UPS is down 2%. I want to get the actual numbers on their deliveries and what the CEO is saying as well. Let's see if we have some more results here. No, we still don't have more results here. Oh, no, we got it. All right, here we go. I think we got it. It looks like they lowered guidance as well. Okay, here we go. Here's FedEx. Let's see what the heck's going on. FedEx needs to call Palantir. Yeah, that's something they need to do.
Hey there, Morgan. FedEx shares down double digits, as you can see right there. A miss on the top line, also a big miss on the bottom line. Estimates for EPS, 476. It came in at 360. The company also lowering its full year guidance, both for revenue, saying they expect its revenue to be lower, but possibly more importantly, its EPS guidance for the full year, lowering the top end of its EPS guidance by $1. Previously 20 to 22, now just 20 to 21. Looking through the report, we're seeing they're also authorizing a $1 billion share buyback. On the other side of the coin, the company says its drive program, its transformation to cut costs, they say that is on track to save the company $2.2 billion this year. But just taking a look at the report, some big misses in a key segment. FedEx Express, that's their signature air delivery business. The estimate for margin there was 9.6%. Instead, it came in at about 5.2%. So a big miss there. That's a key area for FedEx. About half of their revenues coming from that. FedEx shares down almost 11%. A miss on the top line, a miss on the bottom line. They also lowered their full year revenue and EPS guidance. Back over to you.
All right, Frank Holland, thank you.
Okay, that is interesting, dude. So let's see what the CEO says. Despite a challenging quarter, we remain focused on transforming our network, improving our efficiency, lowering our cost to serve, and enhancing our ability to adapt with speed to evolving market dynamics, says Raj Subramaniam. All right, so we have a Brown running FedEx. It's not making the Browns look good, given the stock's down 10%. Overall, I remain confident in the value creation opportunities ahead as we focus on reducing our structural costs, growing revenue profitability, and leveraging the insights. Okay, none of that matters. Our revised outlook reflects our continued confidence in the execution of our drive initiatives. None of that matters either. We will continue to manage our capital prudently and remain committed to our plan to return $3.8 billion to stockholders this fiscal year. He's not really explaining why it was a challenging quarter in that comment. He's kind of just saying, despite a challenging quarter, but like why was it challenging? What happened? What kind of? I need to know if this is an issue with the consumer, if this is an issue with their B2B business, if this is an issue with demand overseas. Like, we're really not getting any explanation other than we will try to be better. Like, there's legit no explanation. We on CNBC, they said their margins on the services business was down, which is a majority of the revenue. So that's a quantitative explanation. But what is the actual reason why they aren't doing well? So you have some people saying FedEx is proof that consumer is cutting back. No matter what people say to me, they are. We are all sick of spending money. Okay, so I have some people saying that on Twitter around FedEx. Here's the actual numbers right here. It's challenging because they don't use Palantir. Is FedEx a Palantir client? I feel like I would know that. I don't think I've ever seen anything between these two. I don't think they are, but maybe. Adjusted EPS again down 20% year over year. Revenue down about 0.46% year over year. Operating results decreased due to fewer operating days and lower U.S. domestic priority package volumes. Fewer operating days is a cop-out. That's not a That's like, I don't know. That's not the best reason. Lower U.S. domestic priority package volumes. That right there tells me that consumers in the United States have not been sending or potentially buying as many packages. So that's at least one explanation for the miss on earnings, which is equivalent to the consumer. FedEx Freight operating results declined due to reduced priority shipments and lower weight per shipment, partially offset by higher base yields. Again, that has to do with demand. So demand on the freight side and on the consumer side seems to be the issue. They have $6 billion in cash. They bought back $1 billion of shares. They're planning to do $1.5 billion more in fiscal year 2025. Let's see does the S&P care about this? Does the market care about this? We'll look at Lennar in a second. Lennar is down a little bit, but Lennar is up a lot this year. Is FedEx up this year? I don't think so. I think FedEx is down for the year. FedEx stock is year to date. Oh, no, wait. Yeah, no. So after this 9% decline, FedEx is still up 10%. It was up 20% this year. It was up 20% this year. Okay, on the last earnings, they did not dump. So whoever said they dumped on the last earnings, they were at 256. They went up to 313. So the last earnings in June, they actually did great. This earnings, there is a difference. And maybe that's because of this lower demand stuff. So S&P right now, S&P's down a little bit after hours. I don't know how much they really care about FedEx, but it's down a little bit. IWM, that is down a little bit after hours as well. QQQ is also down a little bit. That might have nothing to do with FedEx. Bitcoin is down a little bit as well, 63,195. But FedEx is down. It was UPS that dumped. Okay. It was UPS that dumped, not FedEx. Okay, Lennar. Let's look at Lennar earnings. So what do we got from Lennar? Lennar is a home builder. This company, they're barely down after hours. So this one, I imagine they did well. Lennar stock, year to date, up 30%. A lot of it is being priced in terms of rate cuts being good for buyers or for home builders and obviously home buyers as well, if mortgages are lower. So let's take a look at their earnings. Lennar, what do we got? So on Lennar, we have, is it not out yet? I don't think it's out. I would see it if it's out. Or is that even a... No, it's not out. I guess it's like a 415 type of thing. Wow. Oh, so we can't even judge really the stock moving. I don't think anyone has the numbers. Lennar is, from what I'm seeing, not out yet at all. So this move after hours doesn't really matter. Unless I'm looking at it wrong. Nope, Lennar is not out. Lennar is not out. We're still waiting for that. Okay, so I'll get you guys that as soon as that comes out. That'll be interesting because if they were able to build more homes during the past 90 days, even without rate cuts fully like legit happening, which is what JPOW, made real yesterday, then that's bullish. But I do think that's priced in. And as long as, they're not literally priced for perfection and there's not a sell-off based on subpar numbers, then maybe this one doesn't fully take a hit. Maybe it goes higher based on rate cuts. Yeah, that one's not out yet. Lennar works with Palantir, correct. They do work with, that's the first time I discovered Lennar. I think they had an AIPCon video like a year ago, if I'm not wrong. I am pretty sure they had a video together with Palantir. But that's when I first learned more about them. Yep, they do. 6 months ago. It was the last AIPCon, AIPCon 3. No, so 2 AIPCons ago. So that is good that they do work with Palantir. All right, we're getting nothing after hours. So let's go to CNBC. Let's listen to Ryan Detrick. Ryan Detrick, for those that don't know, every time I pull up a chart around like historical stuff, around like these random statistics of like, hey, if the S&P is green on a Tuesday and you eat a cup of pudding, then it'll be green on a Wednesday. This guy is the guy who comes up with this charts. He's been relatively bullish in the Tom Lee, Dan Ives camp. Lennar down about 1% after hours. Let me start playing that. Well, I'll get the numbers, and as soon as I get those numbers, then we'll keep going from there. But here's his take on the Fed rate cuts that we got yesterday. Lennar is at 430. Okay, perfect. So in 15 minutes, we'll get Lennar.
50 basis point rate cut. So why do you think investors can still buy here?
Yeah, John, thanks for having me back. Happy all-time highs. Happy Talk Like a Pirate Day. And it's also my son's 12th birthday. So happy birthday to Gus. But listen, as everyone's talked about on your network a lot, the next 2 weeks are historically pretty weak in terms of kind of the seasonality. October is the worst month in an election year. So let's have that kind of out there. But the reality, again, is we're not going into recession. Come on, the all years.
Whoa, Nike CEO just got hit. Holy crap. Nike is up. Dude, what is up this year with CEOs getting nuked and the stocks exploding? Oh my goodness, dude. Does anyone know the replacement yet? Do we know the replacement with him? Every time Starbucks, Nike, Bill Ackman, okay, I can't guarantee, but I have a feeling our boy Bill Ackman had a role in nuking this guy. Because remember, he bought 3 million shares of this sucker. He sold Google to buy Nike like 2 months ago. Wow. Bill Ackman just made a lot of money. I think Bill Ackman's average is like 72, 74. Holy crap. All right, we'll go back to that, but I'll get some updates on Nike. Wow. Got nuked. He's out.
Saying there's no recession. It's slowing down, sure. Look at initial claims, right? 4-month lows just today. That's a good real-time indicator for what's really happening with the labor market. We can get into all the weeds of it, but we'll look at another 20% gain this year on the heels of last year's 20% gain. We do think, John, there's more upside once we get through the election. But one thing to think about, and I sent this to you, when the Fed cuts near all-time highs, within 2% of all-time high, like they just did obviously yesterday, found 20 times back to 1980. S&P's higher about 14% on average, higher 20 times, every single time. So listen, who knows, this is 21. We think it very well could be. Now, I'll be clear. We were about 3% away back in 2007 when they cut. So, you can always add an asterisk to it. But the reality is don't fight the Fed. We're still in that camp here.
Okay. Now, Brooke, now that the Fed has started cutting, how do you use fixed income in portfolios to balance risk? How much and what kind?
Mm-hmm. Fixed income, it's a broad spectrum. And when we look at our portfolios, we tend to buy quality, and then we'll supplement it with some high yield, but from a fund or from a manager. So right now we're buying out 3 to 10 years, diversifying into a ladder, and really looking for high coupons, high quality, and just wanting to have that diversified maturity stream.
So, Ryan, I mean, worst case, you have a market that's expensive. Best case, fairly valued. We did see this sugar high today from a 50 basis point cut, which is not the type of cut we usually get when we're coming to a cycle without a crisis. So does this rally have legs now, or are investors due to step back and say, okay, it started here, it's time to sell the news?
Well, we could very well see some sell the news. Again, we talked about the seasonal. Maybe back to John's original question, asked me about valuations. I mean, look and Mike just talked about this, the broadening out, right? And I know small caps sometimes are a dirty word. We still like small caps. They're at 12% for the year. It's not as much as large caps, no. But if you look at history, it's once the Fed starts cutting is when you see that outperformance of small caps. And we mentioned, the market is kind of expensive, but small caps are historically cheap relative to large caps. Mid caps are actually our largest overweight at Carson Group. We like that area also. So SMID in general, we think it's a lot of opportunity because the Fed's now cutting. And one other thing, hey, earnings growth is coming in. If you look at small caps earnings next year, they're like high teens. S&P's not expected to grow that high. We think that could be a little low. So we see a lot of earnings growth and cheap valuations of small and mid caps. So that's a nice part of the market that you see, I don't want to buy something pricey. That's where investors should look. And we think it still looks good the next, let's say, 6 to 12 months here.
Okay,
we'll go back to Ryan in a second. First of all, quick comment in the chat that Karp sell 20% of his shares. Guys, when you're looking at how many shares these insiders own, you have to look at different classes. Karp owns like 67 million shares, but Class A might be like 4 million. Class B might be like 50 million. So on fintel.io, if you look at the class structure of the shares, you'll see the total amount of their shares. So just make sure to look at that when you're kind of looking at the calculation of the shares. I think in total of his shares, based on the shares he sold over the past couple of days, it's like, 3%, 3 or 4% out of the amount of shares that he has. I might be a little wrong on the math, but yeah, he has about 60, 70 million shares. Okay, so that's what we have there. We'll go back to Ryan in a second. So the guy who's joining is Elliot Hill. Who the heck is Elliot Hill? So they're saying the new CEO retired. For those that are only listening and not watching, I just put a quote over retired. When your stock's down like 30%, you're going to retire. Nike announced that current CEO John Donahoe will retire on October 13th. Elliot Hill, a longtime Nike leader, will succeed him as president and CEO. Donahoe is still going to be on the board of directors through January 2025. Executive Chairman Mark Parker praised Hill's global expertise. So is this guy was working at Nike, it seems? Was he at Nike? Let's see. Elliot Hill. Does anyone know this guy? Elliot Hill. No, this is the guy on LinkedIn. This is no. I don't think he was at Nike. If this is the right guy, he's just an investor and advisor. Who is this guy? Elliot Hill. Who is this guy? Elliot Hill. I feel like I know this name. A longtime Nike leader. Elliot Hill is a longtime Nike leader. What does that mean? Does he wear Nikes on, like, does he just wear a lot of Nike shoes? What is a longtime Nike leader? Oh, he's a veteran. Oh, so he used to work at Nike. He's a veteran. He used to work at Nike. He's back. So they just brought back someone. Basically, they're pulling a Starbucks here, where they bought not this time, but they brought back Howard Schultz. Now, he was the founder. Elliot Hill is not the founder of Nike. That's Phil Knight, I believe. But they're bringing Elliot Hill back. Interesting. Do we like this move or do we hate this move? The stock loves this move. Goodness gracious. The stock absolutely loves this move. Looking at, wow, it's up almost 10%. Holy crap. Retired as president of consumer and marketplace at Nike in 2020. Okay, so this guy was leading consumer and marketplace in 2020 at Nike. He retired. Now he's back, and they got rid of Donahue. Brian says the other guy had to go. Why? Why did the other guy have to go? I don't know him too much, but for those that know the Nike brand a little bit more, why did that guy have to go? Outside of the stock being not the best, what did you see from him CEO wise that was bad? Like the Starbucks guy, I don't know how to say his name, but like, I remember watching a video where he was like, I don't work until after 6 p.m. or I don't work past 6 p.m. And I'm like, all right, that guy's got to go. Like that, you don't need to know too much about the guy to know, like, all right, that guy's not going to take Starbucks to the next level. But this guy, I have no opinion on this guy. I don't know too much about him. Doug says it's not just the stock. They're getting their lunch handed to them by new brands that are just starting. That's fair. He lost focus. Yeah, well, I would imagine the new brands that are gaining market momentum, it's probably because Nike lost focus, and that's obviously, I mean, that goes back to the CEO at the end of the day. He messed up around core customers. They need to get back to the roots of running and athletics and reignite the Jordan brand. I have a feeling Bill Ackman is involved in this. Up 10% on this move is pretty aggressive. And Elliot Hill is not Howard Schultz coming back to Starbucks. So I don't know why the market's so excited, 10% excited about Elliot Hill. I mean, I don't think this guy's like that big of a deal, even if he was a good executive at Nike. So this is more so saying we don't like the new CEO. We're happy there's a change. Nike now year to date. Dude, Bill Ackman really... Every time they got something planned. Nike now year to date still down 24%, but I believe Bill bought in this 75-ish range. It could probably be even lower than that, but if he got the absolute bottom, it was 72. Most likely he got like 76 to 78. So he's looking at a decent gain right here at 88 on 3 million shares, which is not bad. Not bad at all. Eric says last year NFL players complained about the uniforms. Then in MLB spring training, players said Nike uniforms were cheap with too small lettering. They couldn't provide quality in small numbers. Yeah, definitely the old CEO messed up. Now it's just a question of why Elliot Hill is the guy that changed this. All right, we'll go back to Ryan. I'll get some new updates on this Nike stuff. And then in 5 minutes, we have Lennar earnings as well.
Great. I'll note FedEx earnings are out. We're going through those results. Stocks popping initially here as we do have that cross the wires. Brooke, it's down. Okay, it's down a lot. It's down 12%. So we're going to get you those results shortly here. In the meantime, Brooke, bottom up year-end target price for S&P based on your calculations, 56 to 5,800. We closed here at 57.13. You looking to change that call, or are you putting the money to work elsewhere? Like, for example, small caps.
Yeah, we are. We like small caps. I couldn't agree more. That said, there are quite a few tailwinds right now in the market. We're setting the expectation near term, fully expect volatility. It's an election year. We've got debt ceiling negotiations coming up. September, October tend to be the worst performing months of the market. So in the next 6 weeks or so, we think the market will bounce around and the risk is probably to the downside. Going forward from there, though, I think we could see higher levels in the S&P, and I wouldn't be surprised if we revise our price target a little higher. We could raise it to 6,000 for year end. When you've got the amount of cash that we've got sitting on the sidelines and economic data that's coming in pretty favorable, that very well could fuel a leg up in the market.
Ryan, are you watching economic data more, or are you watching earnings and the micro more at this stage now that we've entered this cutting cycle?
Well, I think we're watching a little bit of both, if that's the answer I can give. But I mean, just talk about the economy. I mean, there are parts. We know this parts of the consumer slowing down. There is some stress there.
Well, but I mean, I guess my question is, do you feel confident that you can pay attention to individual company fundamentals at this point and not have to worry about the macro story taking over?
Well, we'd focus probably more on the macro story, to be honest, John. I mean, yes, like you just mentioned, what FedEx just came out, there's always company-specific things, but just the big macro backdrop to us is still pretty darn solid. I mean, again, I know we talked about earlier, but claims at 4-month lows. I mean, who was thinking that this time 6 weeks ago, right? We saw that spike after the hurricanes and things. I mean, there's going to be ebbs and flows with this, but the reality, again, look at bankruptcies. I mean, bankruptcies are actually trending lower, right? I mean, that's something people aren't talking about. So it's not perfect on the macro backdrop, but all in all, it still suggests, again, no recession in our opinion, and we are still in a pretty strong bull market. One final comment, this bull market's about 2 years old, right? We know that, October 22. Your average bull market, the last 10, lasts about 5 years. Who knows if this is going to last 5 years? I think investors need to really realize that there still could be a good deal left to this bull market is what we're trying to stress.
Okay.
All right, so that's Ryan Detrick. Agree with a large amount of what he said. At the end of the day, the consumer is not perfect. Macro data is not perfect, but there is enough data when you look at a lot of different perspectives to say that the markets can support going higher as long as earnings continue to show growth as well. FedEx recovering just slightly. It was down 11%. Now it's down 8.9%. Still a pretty crappy earnings. Now, FedEx is interesting. I mean, this is one we're going to have to think about for the next week and try to see if we can deduce any conclusions. U.S. domestic product volumes, they said, was down, and then freight product volumes were down, which simply translates to me in normal person language. People aren't ordering that many things. People aren't sending that many things. Well, if that's the case, does that, well, all right, I'm going to go on a gander and I'm going to say Shopify is down after hours. I'm going to say Shopify is down on FedEx. I might be wrong. Let's see. Shopify is down. All right. So Shopify is down maybe about after going up about 5% on the day. It's down about 0.5% right now. The reason that might be down is because Shopify sends out a lot of orders through FedEx. And so you would imagine that if FedEx is saying they have demand slowdowns and they're lowering their guidance, does that apply to the e-commerce players that are sending out a lot of packages via FedEx? Is Amazon down after hours? Amazon is down. Now, here's the other thing. This could also be kind of bullish for Amazon and UPS because it could just be that they're eating FedEx's lunch and it's not really about the consumer. It's about FedEx just not really having the vertical integration they need to capitalize on essentially the monopoly they had for a while before Amazon and UPS really got in there. And so that could be a more company-specific thing, but it's something I think we're going to have to look at a little bit more. Lennar, okay, here's 4:30. Lennar, we should be getting the numbers pretty soon on Lennar. We don't have them yet. As I get these numbers, let's get the Nike update real quick, and I'll be pulling up those numbers for Lennar right now. Let me see. Maybe I can get the Lennar numbers first. Let's see. Can I get them? It's 4:30. Should be out pretty soon. Let me pull up the stock real quick, and then if not, we'll go to the Nike stuff. Lennar. Oh, we're up. We're green. We are green, folks. We are green. Let's see if we can get the numbers now, but we are green. Okay, here we go. 426 on EPS versus 362. That's a beat. Revenue, wow, 9.4 billion versus 9.15. That's a beat. Look at that. Lennar. This is what happens when you use Palantir, baby. There we go. Lennar. EPS beat. Revenue beat. Let's try to get some more specific numbers on what they did. Let's see if we can pull up their results. Those are good top line numbers. Those are pretty damn good top line numbers. Do we have the results right here? Okay, not out yet on their website. Let me see on Twitter if I can get some numbers. That's not bad, dude. That's not bad. That is not bad at all. I want to see how many homes they built. I want to get some more specific stuff. Yeah, none of that stuff is out yet, but those are the top line numbers. EPS 426 versus 362, 9.4 versus 9.15 on revenue. Real quick, let me look at the others. So before we get those numbers, let's look at the other home builders. A lot of them got upgraded today as well. So if we look at TOL, so Lennar right here is up about 1%. TOL after hours is up 1/3%. PHM is flat, but it was up 3% on the day. KBH, they're up 0.5%. They were up 4% on the day. DHI, DR Horton, that's up 1.39%. It was up 1.48% during the day. And then DFH, that's flat, but it was up 3% on the day. Palantir's down 1% after hours. Palantir, oh wow, hold on, what happened? That's a nice decline, down 1.49. What happened? Let's see. Something had to happen for that. Something had to happen. Let's see. You don't go down 1% after hours like that. What do you think? Any news? Any updates? Any updates? I don't see any insider selling. I don't see any insider selling on the website. Let me check. Hold on. Let me check a different website. Sometimes the other one is slow. No, nope, nothing. Yesterday, someone sold like 6,000 shares, but that's not a big deal. Huh. Why are we down? 1.14. It could be a whale just offloaded a ton of shares after hours. I don't think management's allowed to sell after hours, so it can't be insiders. I don't know, guys. I'm trying to figure it out. Pre-S&P sell-off, that could be something as well. Kathy, I don't think she does after hours. I've never known. I don't know if she's allowed to do after hours. It could be her though. Was it you, Amit? I don't think I could tank Palantir 1%. That's it's a little aggressive. So no, it was not me on that one. I don't know. All right, let's go to Nike. Then I'll get the Lennar numbers, and then we'll keep going from there. We'll see if there's any updates on Palantir. All right, so here's the Nike update.
I can tell you that Nike CEO John Donahoe is going to be leaving the company. It has just been announced that by the board and John Donahoe, a mutual decision to retire effective October 13th. Nike is going to name here a brand new CEO. Elliott Hill will be the Nike CEO. Not a name widely known to Wall Street and outside of Nike, but very well known inside of Nike. He's a 32-year veteran of the company that actually left in early 2020, just after John Donahoe was announced CEO. Shares are spiking here in the after hours as...
Oh shit, I think I have the Palantir news. If this is not wrong, the headline is Karp just sold $325 million worth of Palantir stock. 9 million shares. Yep. This is the news. 9 million shares. There you go, baby. That is, to only fall 0.5% off of 9 million shares. That's actually, I'm just saying, that's kind of crazy. All right, so you got Karp, who just cashed out 9 million shares. Now I get why some people are wondering, why did he sell 20% of his position? Okay, so you might think he sold 20% of his position because shares after says 6.4 million. That does not look at the Class B shares, from my understanding. I'll double check that, but that's what you got right there. So here's my analysis on this real quick. Here's my analysis on this. And I'm pretty sure this is going to be very consistent. Check me in the chat if this is not consistent with what I've been saying over the past couple of days. The stock is getting up there in terms of valuation. It is getting up there. I've been saying this really since it was like $30. When you get a stock that gets up there this much in valuation, this quickly, you have a lot of people that are close to the insiders in the company. I don't think Karp thinks about the valuation all day, but he probably has a team of financial advisors that really think about the valuation all day. And I'm pretty sure today they said, hey, Dr. Karp, shit's getting pretty expensive and you've had these shares for 20 years. It's time to take some profits. So what I imagine that has happened is the team at Palantir basically said, this is time to sell, at least Karp's advisors. That is my analysis on it. How do I feel about that? Quite frankly, the guy's been there for 20, 25 years. He deserves to sell. He deserves to take profits. Number one. Number two, if you hate this move, you can sell with him. You do not need to stay in a stock if you are upset that the CEO is selling shares of the stock. And then finally, number 3, this is exactly what has happened every time with Palantir. Remember back in 2023 when it hit $22, $21, $18, Peter Thiel was selling 40 million shares. This is what happens, dude. People sell. People take their profits. So the final point of analysis here is what Mo says. How does 9 million shares drop the stock only by 1%? So remember, I believe the 9 million shares were sold during the day. It's just coming out right now, so everyone knows that it's like that he sold. So it's not literally 9 million shares being sold at 4 p.m. Number 2, one of the other reasons that Karp probably decided, yeah, let me take some damn profits today, is because if someone, for example, if I had an apple and that apple's worth $5 and you're willing to pay me $100 for the apple, no matter how smart of a person you are, even if you think that apple is going to be worth $5,000 one day, if I don't think that the apple is going to be worth $5,000 anytime soon, or even close to being worth $100 anytime soon, and you're willing to give me $100, here's my apple, and I'll make a $95 profit. At the end of the day, as bullish as I am on Palantir, the valuation's up there. That does not mean the stock needs to go down 50%. That does not mean the stock won't go to $50 in the next couple of weeks if we have some crazy bull run. But that does mean there are people that have been in this company for years that are probably going to take some profits. And I think that's what you're seeing right now. So interestingly enough, the fact that it's only falling 1% after this news comes out is just insane, because it means there's so much liquidity. So many people are ready to buy the dip. And quite frankly, I think that's why Karp's, I mean, if he knew that, hey, selling 9 million shares would tank the stock 30%, he probably wouldn't do it. His advisors were probably like, hey, like, yeah, it's not going to look good yet. But if you got people willing to pay you so much money for a stock that probably has not justified the growth metrics to be worth the amount of money people are paying, then you're going to probably sell and take some profits. And that's what we have going on right now. Good guy Karp is helping out your covered calls. So that's another thing. Karp realized he's got to help your covered calls. Now, tomorrow's going to be very interesting. Tomorrow's going to be interesting because now that this news is public, it's going to go mainstream. And on a Friday, the market's going to have to make a decision while Palantir gets into the S&P 500. Hey, do we care about this or do we not care about this? 2 things about this. Remember, S&P 500 usually tends to dump a stock about 15% over the next 4 or 5 months. Maybe that happens. Maybe that doesn't. Just historically, that tends to happen. And then B, fund managers might have already bought a lot of the Palantir they needed to buy to allocate to their funds. And now it's a question of how retail thinks about the stock going into the S&P 500. If they like that Karp sold, they don't like that Karp sold, they're going to have to make that decision as well. Hendrik says, I'm a longtime shareholder of Palantir. I've never sold a single stock, but this insider selling by Karp really annoys me. Why would he say we're going to be 10 times bigger and the next time sell? So I sympathize with this point. I do think the analysis here is a bit more nuanced. The guy's been at the company for 25 years. When you're at the company for that long, same thing with Peter Thiel. I mean, like let's look at Peter Thiel on Meta's IPO. Peter Thiel has his shares at Meta at an average of, remember, he invested at a $5 million valuation when he put in $500,000 in the company. Or actually, no, it was like a $1.8 million value. It was like Meta's now worth $1 trillion, right? So he obviously, I'm pretty sure he thought Meta was going to be worth more than the $25 IPO, which I think IPO'd at 40 billion or whatever. Meta's now worth $1 trillion. If Peter Thiel held on to all those shares, even though he probably thought, they would be worth more in the future, he would be very, very rich. As an insider of a company, you take profits, and you take profits as the company progresses. As long as the company is executing, this is my actual answer to this. So the first part of the answer is that no matter how bullish you are on where Meta could go 5 years from now or where Palantir can go 20 years from now, you take profits along the way. That's just what happens. You guys have to remember, a lot of people here maybe have a couple thousand shares, 10,000 shares, 20,000 shares. Karp has not hundreds of millions. Peter Thiel has hundreds of millions. Karp has tens of millions of shares. So him selling off 9 million or 10 million or 3 million, it doesn't put that much of a dent into his overall equity. Number 2, if you believe that the company is going to be big in the long term, you still need to be able to A, pay your taxes, B, do all your personal stuff, whatever it may be, and then C, get rewarded for the fact that you've been at the company for that long. And so that is why a lot of these insiders tend to usually take profits, and you kind of got to take profits along the way as you go further. Now, if the company was not executing, that's where I would say, yeah, this is a red flag. From all accounts, and from everything we've seen over the past couple of months, the company's executing dramatically, right? I mean, like Palantir right here down about 1.22% after hours. The company is doing more than we can imagine when it comes to execution, when it comes to winning government deals, AIP boot camps, yada, yada, yada. Like all this stuff that the company's been doing, we don't have to go through every single point. They've been executing. If this is Ryan Cohen selling off of a at the money market offering when Roy and Kitty tweets out a picture of someone sitting up out of their seat, that's when it's disgusting. That's when you should feel really bad. That's when you should be very scared. That's when you should be like, oh my God, this guy's a scammer. If a company is reaccelerating growth and they took the stock up 115% year to date, I mean, it's just prudent, I hate to say the word, but risk management to take some profits if you've been in the company and dedicated your life to it for 30 years. And again, if you absolutely hate it, I think a lot of that analysis ultimately is what makes this nuance. If you absolutely hate this, you can sell as well. You know, you do not have to own a stock that you think is not going to go up to the levels that the CEO thinks is going to go up simply because the CEO is selling. My analysis here is that the CEO is selling for a variety of reasons, but because they're accelerating growth and because they're continuing their momentum, that doesn't mean the stock cannot be worth something more in the future. I mean, just look at NVIDIA, right? Jensen has sold $683 million worth of stock over the past 6 months. NVIDIA is up 150%. He has executed against the mission he has for shareholders, which as a fiduciary is to give them some type of a return. And he's taking some profits on the backs of that. I think Karp's doing the same thing. Elon has done the same thing in the past. All these people do this. The question is, how comfortable are you with them doing this? And what state is the company at while they're doing this? And quite frankly, a lot of them do this when the stock runs up so much, because the stock running up is the reason they're allowed to sell so much, right? And the only reason the stock's running up so much is because the company is executing. So when you take it from that perspective, to me, it's just not that serious of a deal. But it ultimately depends on what's your trajectory and if you think it's a good idea to hold it or not. Now, what I am curious about is when Peter Thiel is going to start selling. I said this on the market open. I'm very curious. When is he going to take profits? Thiel takes profits on everything, dude. This guy does not hold ever. I mean, I think the other day he said he sold most of his Bitcoin that they bought at 30,000 back in October of 2023. Like, they don't, like him, Founders Fund, they sell, they get liquidity. He's like a professional guy who understands how to sell and not really care about what happens after. He has not sold in about 8 months on Palantir. So I'm curious, when does that happen? Because when that happens, I think now you're going to see a lot of insiders kind of take some profits here. And that maybe marks a short-term top. And maybe this is going to mark a short-term top. We'll see tomorrow. But so far that hasn't happened yet. 65 million is now going to Uncle Sam. That is also correct. Also, Karp is scheduled to have even more shares based on his stock options. So part of this sell could be because he's exercising those contracts. I think that's exactly what the screenshot said, that he is. Yeah, it's a sale post-exercise. So I would imagine when we get the updated numbers in the next couple of days, Karp is probably buying 1 or 2 million shares, whatever it is. I'm just making this up off the top of my head, at maybe like $4, $5, $6, right? Like really cheap prices. And in order to have the money to be able to buy those shares and then cover the taxes from selling the other shares, you have to sell shares. And so that's what you have right now for the insider selling. Okay, there you go. Let's go back to Nike and then we'll get some more updates on Lennar and keep going from there. But let me know in the chat what you think about this. Does it make sense? Do you feel uneasy about it? Do you not really care? And kind of, does it beg the question of, should you sell your shares given you're seeing that Karp is selling as well?
There were some serious confidence questions on Wall Street, and I'm told inside Nike, around John Donahoe's leadership. So here's what I can tell you. I do have a quote from Mark Parker, who is the executive chairman of the board. There are the details for you. Donahoe to retire October 13th. So this is right around the corner. He's going to remain an advisor to the company through January 31st, 2025. So kind of a friendly transition out. From Mark Parker, I'm excited to welcome Elliott back to Nike. Given our needs for the future, the past performance of the business, and after conducting a thoughtful succession process, the board concluded it was clear Elliott's global expertise, his leadership style, and deep understanding of our industry and partners, paired with his passion for the brand and for sport, products, consumers, athletes, and employees, make him the right person to lead Nike's next stage of growth. So, who is Elliott Hill? Here's what I can tell you. He started at Nike in 1988 as an intern, worked his way all the way up in multiple different positions. His last job before he retired back in 2020 is he led basically all the commercial marketplace business for Nike brand and for Jordan brand. He had a good relationship, I'm told, with Michael Jordan, and in fact pitched Jordan on taking that brand global, which is a huge credit to their success. His chops are in sales, which I think is a key distinction from John Donahoe, who Wall Street knows very well. Donahoe was known for his tech expertise and also consulting. Came from Bain originally, then led eBay, then ServiceNow, and into Nike. Was an outsider. So another stark contrast to Elliott Hill being named here the new CEO, who is very much an insider, and I am told very, very popular, very well liked, and that this is going to go far when it comes to morale. I also have a quote for you just here for CNBC from Phil Knight, the founder of Nike, chairman emeritus on the board. I want to express my deep gratitude to Mark Parker, Tim Cook, who is the lead independent director on this board, John Donahoe and the board for their leadership during the transition. Leadership changes are never easy. They test you, they challenge you. But this transition has been handled with remarkable thoughtfulness and an unwavering commitment to Nike. He goes on to say their dedication to the business, its people, and shareholders has been admirable. I also want to personally thank John for his leadership and commitment to Nike over the last 10 years. And then he says, looking forward, I couldn't be more excited to welcome Elliott back to the team. His experience, understanding of Nike and leadership is exactly what's needed at this moment. We've got a lot of work to do, but I'm looking forward to seeing Nike back on its pace. Now, what?
Okay, we'll get back to Nike in a second, but one quick other thing on Karp. So something that's interesting, guys, he did not sell 9 million shares today. The 4 million shares I reported the other day, and then the other 4.5 million shares the other day, that adds up to 9 million. So this account that's reporting it, and I guess the articles that are going out to make this viral, which is why it's Palantir's down 1%, they're just reporting the past couple days of him selling. So all of us knew this. It's not like he sold 9 million shares today. He sold 4.5 million the other day, 4.5 million the other day. So there's how you get your 9 million. There's how you get your $325 million worth of stock. So one update on this that I just got sent is, I'm just going to show you the picture because it's not showing there. So both sales of roughly 160 million were related to the exercise of vested stock options. The total amount of shares he has generally remained unchanged. That's actually a very important piece of information. So this is the picture right here. You can see right there, 4.5 million and with the A that's acquired, and then 4.253 million with an A that's acquired. In order to do that, he had to dump shares as well to be able to acquire those shares, to buy them, obviously to pay the taxes and the delta between the difference of the shares. So underneath the SEC filing, it says the reported person, that's Karp, exercised 4.5 million vested, meaning he earned those shares over time staying at the company, Class B common stock options, converted the resulting shares of Class B common stock to Class A common stock, and immediately sold the shares of Class A common stock in the open report. The reporting person exercised 4.25 million of Class B common stock options. That's for the second day, and did the exact same thing. So yeah, again, I mean, there's going to be a lot of headlines around this. People are going to try. It's easy to get clicks on this by saying someone's selling or whatever. But from my understanding, he exercised options, has relatively the exact same amount of shares he had before, give or take a couple of percentage points, and had to sell to ultimately pay the taxes for the shares that he acquired as well. There you go. Okay. Someone says you could use a bit of a manicure. Understood. I need to maybe go get a manicure. Maybe get another pedicure. Dude, it's relaxing. For the guys that haven't tried it, I'm telling you, it's $30. It's relaxing. It's worth it. A little expensive, but it's worth it. All right, back to Nike.
What happened? Well, as we know, Nike's had a number of stumbles lately. Stock's down 25% this year. It's down almost 50% from its peak that it reached back in the end of 2021, fall of 2021. Donahoe's tenure started out right in the middle of COVID, and he was the right guy at the time because the whole aim of Nike was to become a digital-first focused organization. And the world moved online. And so Nike actually did quite well in the beginning. But then when the world opened back up, it became clear that there were gaps in innovation, for instance, something Donahoe himself had mentioned and had admitted. There were gaps in terms of the strategy around wholesale. Donahoe had broken some of the relationships with wholesalers to focus on direct to consumer, on their own business, online and in stores. And it turns out a lot of the upstarts and competitors, the Ons, the Hokas of the world, were out there innovating and getting shelf space. And so that was seen as a big black eye sort of on the strategy as well, which came to light when Donahoe himself reversed that strategy and said in recent quarters they were going to focus more on the wholesale business and try to grow and win back that shelf space. Also said that they were going to take a deep look at the organization, announced 2% workforce cuts and job cuts. but it just never seemed like the right sort of culture to get Nike winning share where it's been, certainly under the previous CEO, Mark Parker. So that's a reflection,
Sarah,
I think, of the stock guys
Sarah,
up 8% on this change.
I
Go
mean,
for it.
was he the right guy? I'm trying to figure out the most polite way to ask this, but the board could have picked Elliott Hill to begin with. And there seems to be a little bit of a trend in, there was a trend years ago of these companies in certain industries picking tech CEOs to come run them. And now, you know, Starbucks didn't go to tech this time for an operating guy or a leader. They went to Chipotle, and now you have Nike going back to somebody who grew up in the company to lead it in this next leg. No,
I think it's a really good. It's interesting to compare and contrast some of these examples. At the time, you know, Nike was so focused on the channels and was so focused on being a digital tech first company that John Donahoe was on the board. He had a relationship with Phil Knight, the founder, from his days at Bain. And that was, at the time, the thinking was that that Donahoe would take us into this digital future, which worked really well in the beginning during COVID when that was the case. But then, you know, he didn't have product experience, didn't have retail experience, didn't have experience innovation. And that is what they are bringing back. I will also note, John, to your question, you know, Nike has had a history of bringing insiders, promoting insiders. Mark Parker started out as designer, and they went outside. They've had one other example of going outside and it didn't work out too well. But Donahoe was an outsider, didn't grow up in the Nike culture and around the sneaker culture and the sports culture. And I think that, you know, Parker coming in as designer was very successful. And what they see in Elliott Hill is someone who understands the product really well. He had to sell it. And he also comes from a background of knowing the business and helped grow Nike to a $30 billion business, was responsible at his height for the P&L of all 4 different geographies, including the Jordan brand. So in a leader, I guess they could have chosen him. And perhaps that's one reason he stepped down after Donahoe was named the new CEO, but they are bringing him back at this time because what's needed is they need to get back to their innovation. They need to get back to the.
So why is this guy going to get them back to innovation? That's the only part. And again, I'm very ignorant about the internal employees at Nike and what they've done. Palantir now falling a little bit down about almost 2%. But I don't know this Elliott Hill guy. I don't know. I guess the street likes him. It's up 10%. But I mean, I don't know. I guess they needed someone who knew the culture of the company, can get back to innovation, as Sarah said. But I don't even know if it's an innovation thing. There's a lot of competition with shoes. There's a lot of competition with clothing, the Lululemons of the world, the Ons of the world, the Hakas of the world, all that stuff. I don't know how the CEO change necessarily changes that. Now, granted, the Starbucks guy, the Chipotle dude they brought into Starbucks, he transformed Taco Bell and Chipotle. And so I guess you could see the argument there. This guy who used to be a Nike, unless he launched some really interesting stuff in 2020, which maybe he did, then I'm not sure exactly why the street's so excited about that. But I guess the street likes that the old guy's gone. At least Nike's doing something. You know what? You know what's probably the reason for this? I would imagine, again, I'm going back to Bill Ackman. I would imagine he vetted Elliott Hill, and then Bill texted all the institutional investors. They're probably all in a group chat. And he was like, guys, I got this. This is my dude. I'm going to train him well. He'll be good. Don't worry. We're good. And then the Vanguards and the BlackRocks of the world were like, all right, Bill, if you think he's the guy. And then they nuked the other guy. And then boom, there you go, up 10%. So I kind of think that's how it's playing out. But there you go. Nike is up right now. If you own Nike, congrats, man. If you own Nike, then congrats. You are up a little bit on this. Okay, so another rumor for why Palantir is down right now. I just found this. Street Insider is reporting. Let me share this right here. Street Insider is reporting that the rumors are there's going to be a block trade of a sell. Now, that would be from a couple people I'm seeing it from, Morgan Stanley of about 10 million shares. So this is not the article. This is just a picture of the article. But on the article right here, it says the rumor is Palantir is selling a non-restricted stock block of 10 million shares. I don't know who in Palantir. I don't know what insider is doing that. Maybe it's Peter Thiel through Morgan Stanley. And that rumor might be actually causing the 2% down, which actually makes more sense because Karp selling 9 million shares. We knew about that yesterday. Like that wasn't new news. That was the first time a really big Twitter account tweeted about it. So I guess that like made it a little bit more new, but like we knew about that. This one seems to be more likely, if I had to guess, why Palantir is down about 1.7% after hours. But we're not sure. Again, this is just a rumor right now. We are not fully sure. One thing I will say, and again, I feel like I have to say this, but it's funny how people are freaking out that Palantir is down 2% after hours. I think Palantir can fall a lot more than 2% over the coming months, and I would have zero problem with it because that would allow the company to grow into its valuation. I think every single shareholder, to not sound like an idiot, needs to understand it is okay for Palantir to go back to 30 or to go back to 27. This is a very extreme valuation. It's not that it's not deserved. It's just that when you have an extreme valuation, you also have extreme volatility, usually to the downside, because stocks just don't go up forever. So it's not being bearish. It's rather just saying, hey, let's like remember that things have to eventually come back to life. And there are usually pumps based on a string of events, but those pumps can create irrational valuations, and those valuations can get punished over time. Now, you need more, the more irrational valuation, the more higher the catalyst you need. So for example, when Palantir got that $100 million deal yesterday, I saw a lot of comments on Twitter, and this is anecdotally what I'll tell you guys to try to understand how people are thinking about it. People are like, oh, this is great, but it's not enough. And I'm like, motherfucker, they just got $100 million. Like, what even is not enough? And like, from their perspective, they're like, well, we need more, right? We need more catalysts. We need more growth. We need another AIP con. We need this. We need that. We need blah, blah, blah. And I'm like, at some point, things slow down, like, it's just, it doesn't just go up. You don't just constantly have a string of announcements. Palantir for 2024 has had amazing announcements. They've had a bunch of AIP cons. They've had really good earnings. They've had more GAAP profitability, S&P 500. They've had so many string of announcements. But what happens for like 3 months if there's just not that much excitement? Stock might sell off a bit, right? People might take their profits. So I think it's just very important to understand. And again, as much as I make it a game to be like, oh, let's see if we can get to 37, 38. I hope you guys know that every day when I say that, the idea is that it's fun as we're like looking at the chart because it's like sports. But at the end of the day, there is a very good chance that we don't hit those elevated levels. We don't hit 45 like everyone thinks we can hit by the end of the year. And we go back to 30 or 27. And that is totally fine. At 27, we would be worth, what, 65 billion instead of 82 billion? That's not the worst thing in the world, especially for a company doing less than 3 billion in revenue. So it's fun and it's exciting when we see the stock go up. And like, obviously that's just the fun of the broader equity markets. But but we have to keep it in context. If Palantir was $22, $23 today, I would be saying, yeah, this is stupid. The stock should obviously be worth a lot more. At 37, if we just look at the core basic valuation metrics, it does make sense to see if it would take a little bit of a decline. And by the way, I'm not saying this from my own opinionated ideology. I'm reading the rumors right now and looking at the insider selling from Karp and realizing, hey, even the insiders are admitting it's a bit up there right now. Maybe we should take some profits, which tends to be a little bit of a wall on the stock in the short term, and then execution continues to allow the stock to go into its valuation. Now, if Palantir goes to 50 and everyone just buys it to buy it, I wouldn't love that because, I mean, that's just GameStop to me, right? Like, that's just irrational. It doesn't make sense. And a lot of you guys who are sitting on Palantir shares, I'm sure you wouldn't love that because at some level you would be like, well, I don't want to sell it, but I also don't think it deserves to be at this point. I know a lot of you are already struggling with that. And it's one of those things where then it's just like, you don't know what to do, right? Versus letting it slowly grow over time into Palantir. So long term, if you buy it at 37 or 27, I don't think it matters. But in the short term, I think a lot of people, like the amount of DMs I have 3 DMs I'm looking at right now in my message requests, 3 DMs in a row saying, hey, should I buy Palantir right now? Hey, should I buy Palantir right now? Hey, should I buy Palantir right now? I can't respond to this shit because, oh, I forgot Karp's on Twitter Spaces. We got to stream, or not Karp, Vlad. I can't respond to this because, again, the same argument has always been the same argument to me. If you have a long-term trajectory, you buy. If you buy it at 37, thinking it'll go to 39 and it goes to 34 and you'll be pissed off, then yeah, you can't kind of buy it at this point. My buy range again for Palantir is 27 to 30. If we get to 27 to 30, I like to load up. But above 30, I think it's a bit elevated, and I think that's okay for it to be above 30, but that doesn't mean you need to go balls deep just to go in above 30. Now, if it capitulates at 31 and 32 for the next 6 months, then I'll be like, yeah, this is the new base. We haven't had that yet, right? We've had 5 weeks of 30. And we probably need a lot more to justify it. Okay, we've got Vlad on on Spaces. Let's listen to him. I forgot Evan's doing the space with him. And let's see what he has to say. Let me know if you guys hear this and everything's good.
For all the listeners.
Yeah, I really appreciate that. So we are joined here by Vlad Tenev, CEO and co-founder of Robinhood. I have been using Robinhood for almost a decade now, which is kind of scary to think of. I started using it in college, which I'm sure is probably a very typical story of Robinhood. Obviously, you guys, I really think you guys have created one of the best apps for long-term investors. The UI is really unmatched. And one of the things that you guys have added semi-recently, it's been a little bit now, is Robinhood Gold. There's a lot of really interesting features there. And I wanted to kick right into this conversation here because I know all the time is valuable and ask you about Robinhood Gold. How everything is going. I know there's a bunch of different pieces in there, from the credit card to the APY to the deposit bonus. But I wanted to hear the general thoughts about where Robinhood Gold is at right now, kind of what excites you about some of the stuff that has already been added, and maybe some of the thoughts for the future of it.
Yeah. So just to tell you kind of Robinhood's priorities right now, we are focused on three things. The first thing is winning the active trader market. And that's very much kind of the core of the business. And it's, new product innovations like 24-hour market, adding new assets like index options and futures, and new platforms. We've been talking a lot about how we've got work to do. We're doing well on mobile, but we've got some work to do on web and desktop. So kind of that's one thing. The second thing is there's a massive wealth transfer coming, where in the course of the next couple of decades, over $70 trillion is going to flow down from, silent generation and baby boomers down to younger generations like millennials and Gen Z. And we think Robinhood can be the primary beneficiary of that massive wealth transfer. And one of the things that we're working on to kind of like put a product lens on this concept is Robinhood Gold. And really, the way to think about Robinhood Gold is you should like come to Robinhood for whatever feature resonates with you most. A lot of people come from stock trading, others trade crypto and discover options. Some come for the industry leading APY. But what Robinhood Gold should do is once you become a Robinhood Gold subscriber, it encourages you to discover the rest of our products. And so customers join, they become Gold members, then they use all of our products and put the lion's share of their money into Robinhood. And so it's really about, can we serve the entire wallet, the holistic financial needs of our customers? And I think if we can do that and keep growing it, we can really be the place where millennials and Gen Z and beyond keep all of their finances. We can be their primary financial institution. And then the third thing, we're taking this technology, these capabilities, expanding them internationally and expanding them to other customer bases. So those are kind of the main three things we're focused on right now.
I love it. There's a lot to talk about there. I'm particularly interested in that wealth transfer kind of, because it's been a conversation that we've had a bunch on these spaces, and it's definitely starting to pick up a little bit now. I'm curious on kind of what type of features and, what's the type of thing that you think Robinhood has to do or has to keep doing to really be a major beneficiary of it. Obviously, you guys are very popular with Gen Z and millennials. I like I said, I started in college using Robinhood. I was in the classes, definitely paying attention 100% of the time, but also had Robinhood up a bunch as well. But yeah, what are some of the things that you think Robinhood is maybe well positioned to benefit from this wealth transfer, and maybe some of the things that you might focus on to really strengthen that?
Yeah, I think there's a couple of things, and there's always a portfolio of things that are necessary, and I kind of like to bucket them into three things. So number one is things that you can't get elsewhere, that Robinhood is like an innovator and a leader in that particular space. And those are things like 24-hour market. It's gotten very popular, particularly in this past year, where Robinhood has been, among the only places where you can trade stocks on Sunday nights or, late after hours on weekdays. And you guys, I'm sure, have felt it as well. In the past, we would have to wait for Monday market open for to see like what's going on. Some of the news that hits on weekends, you don't really know how it's going to affect the market, or you have kind of a somewhat tenuous connection through the futures markets. But now with 24-hour market, you can see if there's news around a company, like whether it's Microsoft, when all of the OpenAI stuff was happening over the weekend last fall, or AI companies like Nvidia. You can actually see those individual stocks react right away. And I think that's been a source of new assets and new customers into Robinhood, and just a big source of mind share for us. So we've been investing more and more into that. There's also just kind of like the bread and butter, like we look at customers that are transferring in. And by the way, we've had a lot of that. We've been net positive the past 3 quarters on incoming transfers from all of our competitors, all of the major competitors. And, what we can see is that there are some customers that hold assets at other places that we don't support. They might be holding mutual funds or fixed income. And a lot of these assets, we've kind of considered obsolete, or that there's better alternatives for, but we have to add them over time. In order to be the place where customers consolidate everything. So that's kind of like increase their priority in our mind. And then there's also more account types. We recently added joint accounts. It used to be that Robinhood was only for individual taxable accounts, and it was sort of like your one Robinhood account onto the platform. We kind of ran into limitations for that a couple of years ago. We obviously had to add retirement accounts, and that had to be separate. Now we have joints, but a lot of the larger assets are, for example, in trusts that we don't currently support. So we'll have to round that out. And then I would say the kind of layer that can accelerate everything tremendously is our incentives. And because we're a technology company with lower fixed costs, and our philosophy has been to pass down more value to customers, and not kind of like keep it for ourselves and pad our bottom line as much as our competitors. We've been offering these great incentives to kind of like further incentivize people to move their accounts over. And we've done that on the retirement side with our 3% rollover and transfer bonuses. We've done it. We've got one going right now to commemorate the launch of joint accounts, where we'll give you a 1% boost on any individual or joint account being transferred to Robinhood. That's been working very, very well. So it's kind of the combination of those 3 things. And I think it's pretty cool to see how far the product has come just in the past couple of years. Like before 2 years ago, it was actually impossible to transfer your account into Robinhood. So to kind of like go from 0 and it not being possible to leading all of our competitive set in incoming asset flows, I think it's a testament to how far the team's come, and how customers are, growing with us, and they're not really thinking about us as like a toy speculative trading app anymore, but really are starting to think about, well, Robinhood's offering industry leading service across all of my financial needs. And so I'm gonna put more and more into Robinhood. And for us being used and considered as like a very serious, a place to put your serious money, I think that's been a great evolution of the brand and the company.
Yeah, it's been really great to see it grow. You guys have obviously been able to kind of crack the code with getting young investors, young traders onto the platform, and there's just been so much added over the years. I really am a fan of those retirement accounts being added onto there. And I want to talk a little bit more about Robinhood Gold. First of all, kind of like the underlyings of like how a 3% IRA match works, how a 1% deposit works. And we don't have to get into the full nitty gritty on there, but like how sustainable is the underlying of this. And I also want to add a second part to this, kind of about, we obviously had Jerome Powell and the Fed cutting rates yesterday. The cash sweep accounts, the APY has become a very popular tool. I've honestly started using Robinhood Gold as my high yield savings account. And I wanted to kind of get your thoughts on like the future of that? I don't necessarily need to know exactly how the rates are going to end up in changing, but is this something that you think will be a focus in the long term, that I kind of, I don't want to say you're going to take over the high yield savings account, but that's definitely how I have started using it. So I want to hear the thoughts around, the sustainability and the underlyings of how the 3% match and the 1% deposit bonus actually work, and then the APY on the cash sheet.
Yeah, I mean, I'd say that um, we can talk about both of those things in terms of customers looking at Robinhood as and treating us more as a savings account. We have been seeing some of that behavior. Of course, we're offering very competitive yield, great FDIC insurance protection for your assets, even when they're not invested. And we have a credit card offering now that's done very, very well. I mean, we had 1 million people sign up for the wait list in the month since announcement, and the reviews for the credit card product are better than any product we've launched, even better than free trading if you look on the App Store reviews. So people are starting to think of Robinhood as sort of like a replacement for their bank. And I think there's more work we have to do on the user experience to make that smoother and like more frictionless. And that's where the redesign is coming in, where we can actually adapt the interface toward different use cases, just like Robinhood Gold. Because some people now are coming just for Robinhood Gold, and they'll invest a little bit, but like the investing use case is almost like adjacent and secondary to just earning that yield on their cash, even when they're not investing. And so economic wise, I think we went through a journey here, because the history of matches at Robinhood really started with the retirement product. So when we rolled out retirement, the idea of a 1% contribution match built in was this like very powerful idea that we wanted to explore, but we didn't really know how it was going to go. So that was just like a lightweight way to see how the market would respond and see how customers would respond to it. And I think the one counterintuitive thing that ended up being very, very important is that we saw that as customers opened their retirement account, you might think that they have a certain amount of money, and money they put in retirement takes away from what they might put into their brokerage account. But what we saw was that it kind of the rising tide lifted all boats, and so more usage of retirement actually increased usage of the taxable brokerage account. And so that obviously made the economics better and more incremental. And then we decided to try not just a 1% boost on contributions, but on rollovers as well. And then we looked at what we can do that was like super aggressive for Robinhood Gold customers. And we decided to increase the 1% to 3%. And then it's starting to like, in some ways, resemble and compete with the 401k match offerings out there for customers that are fortunate to have an employer-sponsored 401k with a match. So psychologically, a lot of those offers are around 3% match threshold, and so customers started kind of thinking about that much more. All this has led to retirement usage at Robinhood really increasing. 1.7 billion in retirement at the end of 2023 has grown to like nearly 10 billion in retirement assets in less than a year. So people are using it, and I think we're continuing to develop more and more and improve the offering. But like we've been able to test our way to a broad range of matches and validate the economics kind of as we've gone along.
Wow, from 1.7 to 10 billion in under a year is pretty impressive. And I actually have my own retirement account on there. 3% match literally just pays for my gold subscription, and then like 2x, 3x the gold subscription. So I love that. And I have the credit card. I don't want to flex in everyone, but I did get the solid gold credit card. So I got 10 people referred to pay for that first month of Robinhood Gold. And
I need 4 more.
Pretty
Four
cool.
more.
It's really nice. My favorite thing about the app, which you guys did a really clean job, is that I could take my points and directly transfer it into the Robinhood account. So intuitive. Surprised other people haven't really done that, or at least I haven't seen it. And that was definitely my favorite part of the things that you guys I've done with a credit card so far. The digital stuff is really cool and all that stuff, but being able to transfer it directly into the Robinhood account is very smart.
Yeah, yeah. My favorite is, you know, I've got children, and you can actually get you guys are probably a little too young for this, but you can get your kids credit cards and actually teach them responsible credit usage, and they can like grow their credit scores even before they turn 18, which is pretty amazing. And I don't think anyone else offers the feature in such a simple way, and that's been really popular. You know, my kids love going to the toy store and like whipping their cards out, trying to figure out, you know, which way to put it in the machine. So it's really cute and kind of fun to watch.
Do we have solid gold cards for kids yet?
Well, I mean, if they do a little marketing for us, if they get 10 referrals, but yeah,
You
the
got,
referral
by the way,
thing.
Vlad, you got me with that one. I was so excited. I needed that solid gold credit card. You should have seen me on Twitter on here. I was pushing it. So you guys are great with the promos. That was a good one.
Yeah, and we're looking into giving people more ways to get it. I know not a lot of people, you know, some people just don't love referring friends to things, and it's gotten a little bit overused over the past few years. But what we really wanted to do was, you know, a typical financial company would just give solid gold cards to their highest net worth, highest balance customers. And, you know, it's always been part of the Robinhood ethos that you should get equal access to the financial system, no matter, you know, how big your bank account balance is or anything like that. And so we really wanted a way to get everyone, not just like wealthy people, access to these solid gold cards. And that's kind of how it came about, because really, you know, not everyone has millions of dollars, but you know, folks can hustle and earn their card just by like grit and, you know, building up followings and helping us also get the word out about this awesome product. So we'll probably have more ways to get it in the future. It's gotten really good reception, but that was kind of how we were thinking about the means of getting it, and not just giving it to high balance customers.
Very nice. Wolf, you got a question?
Yeah, speaking of awesome products, a lot of people have been getting very creative with AI lately. I'm curious to get your thoughts on AI and how you see it impacting finance and investing.
Yeah, I have a little bit of a hot specific take on AI. I think there's a lot of there's a lot of AI vaporware out there, and people are just putting chatbots and interfaces where they don't really add much value. I'm sure you guys have seen it. You know, every product from, you know, Facebook to LinkedIn now has like some variant of Chat GPT or Llama baked in. I think if you look at the AI use cases in pretty much any field, not just finance, that'll be successful. The one question that you should be asking yourself is, are people actually paying a human to do this thing for me now that I would want AI, or I'm considering having AI do for me? And I think if the answer is yes, if there's like an established use case where people are paying smart humans to do the thing for them, then I think there's value. If there's not, then I think it's a little bit more questionable. So, you know, if you use this kind of mental heuristic, uh, you can apply it to like self-driving cars, right? Self-driving cars, no brainer, very useful. You pay your Uber driver, your Lyft driver, real money to take you from place to place. If an AI can replicate that experience, and even if it's like a significant portion of the cost, if it's less than 100%, it's probably going to be pretty successful. And so I think for finance, you just have to look at where consumers are paying humans to provide them a valuable service that they're currently paying for. And I think the most interesting place is in financial advice, or what I'd like to call like family office services. So it's a place where customers are paying a lot of money. They're not necessarily very happy. And it's something that is predominantly available to rich people. I mean, if you've got 100 million plus net worth, you might have a family office or an outsized family office that handles all of your financial needs. And our belief is that we can actually use artificial intelligence to make those services more broadly accessible to people without as much money. And that's kind of the direction that we've been building towards. Of course, there's all sorts of use cases internally, customer support, engineering, but I think you'll start to see the first legitimately, or what we hope to be legitimately useful products that'll improve the financial lives of our customers, baked into Robinhood from the start in 2025. So we are really starting to think about, like, what are people paying humans for right now? Can we actually provide that service in a much higher quality way, and really, democratize wealth management and advice in the same way that we've done to individual stock trading?
Love it. I am very much looking forward to all that stuff that might be coming there. AI has definitely become a keyword, and some companies are going to come in and really create some awesome stuff. Some companies are going to do the vaporware and just get the name for it. And I'm excited to see what Robinhood does in this space going forward. I'll be looking forward to that. I want to shift the conversation a little bit back here towards the active traders. Obviously, Robinhood has been one of the best places for long-term investors, the UI, everything like that. But, the trading part of it, you have said yourself, is kind of an area that you guys need to step up your game in and add some new stuff into. So I'm curious on kind of, what you guys are doing in that front to improve the offerings for active traders, and kind of generally how you are thinking about active traders going forward for Robinhood.
Yeah, I'd say in the past couple of years, we've really pivoted our business towards active traders. And I think it's been a large part of the recovery you've kind of seen in Robinhood in the past 9 months to 12 months. It's kind of the fruits of the labor toward active traders actually starting to bear fruit. And I think it took us a little bit longer than you might think. And that's because for the first many years of Robinhood's existence, call it the first like 7 or 8 years, we were just focused on first-time investors. And we wanted to make the best possible, simplest, and most delightful interface for someone to just get started with. And we were doing very well in colleges and universities, doing well with customers that were, buying their first stock. But what happened was a lot of those first timers became more sophisticated, and the amount of content that's out there on the internet that helps people learn and become educated, you guys being an example of that, has just exploded. And so a lot of these folks have discovered options and more sophisticated strategies. And, our interface, frankly, didn't hold up very well for them. They started looking for alternatives. And then there were all sorts of other customers that saw the cost structure, particularly for things like options. And, Robinhood's still among the few major brokers that don't charge options contract fees. Everyone else pretty much is charging, 65 cents a contract. And at 100 contracts, that's $65 in cost. And so, the economic value of switching to Robinhood, even if it doesn't meet all of your needs, is so strong that we had a lot of those customers coming. And so, up until recently, I guess we were serving active traders incidentally. And then we saw that, these customers who were the most engaged, the most advanced, should have been happiest with our product back in 2022, were actually less happy than an average customer. But the great thing was, when we kind of saw this problem and mobilized our resources toward it, we fixed it very quickly. So within 6 months, if you looked at customer satisfaction, if you look at Net Promoter Score, we flipped the story, and our active traders were actually much happier than our average customer. And what we have coming up now is the Hood Summit, which is our first big event for active traders. And we invited a lot of our biggest and most active customers, and we're gonna bring the community together. and we're also going to launch some awesome new products for them. Some awesome new products that were built with the active trader audience in mind. And it's amazing. Like, the core of our business has gotten much healthier, but we've done like fairly easy things, and we're about to release like our first suite of products that's specifically designed for active traders from the ground up. And I hope people will really like it. I think you all will, but we'll see soon.
I am very excited for it. So the Hood Summit is October 16th to October 18th. I was reading some of the kind of the about it as you were talking about there. A lot of the new trading products could be coming. Will we be able to live stream this? Is there going to be a keynote? What can we expect for this Hood Summit, which is coming October 16th to the 18th?
Yeah, basically, the thing that I'm most excited about is launching some new products that you haven't seen before. We've teased some of them kind of visually on social media. And so, I think folks have heard that we've been working on something on desktop web. I've talked about a couple of new assets that are coming, like futures and index options. And, these are some of the most requested features that our active traders have been looking for. So I always love rolling out new products, but we're also going to have some community events and some speakers. So it'll be fun for all ages.
I am very much looking forward to it. Awesome. I appreciate you joining me on this one and sharing so much. I know I did see today Robinhood actually coming out and becoming the official jersey patch sponsor for the Memphis Grizzlies. You guys were posting some like cryptic messages over the last couple of days, and I have to say, there were some internet sleuths who actually got it. They were like posting the pictures and like doing some like full on like photo editing and laying it over it. And I was impressed that they were right. But that seems something pretty exciting that you guys have coming here, becoming the official jerseys patch sponsors for the Memphis Grizzlies. Are we rooting for the Grizzlies now this year? They're gonna do good?
Well,
That Robinhood boost?
I do like the Grizzlies. I think that if you look at how they've done in the past couple of years, I mean, they've been like a top 2 team in the West, and they've got some good young talent. John Moran, he's been a little bit questionable in the past year, but I think that I'm hoping he comes off strong. Desmond Bain is looking really good. Derrick Rose still playing. He's a former MVP. He's pretty amazing. So I think there's a lot to like in that team. I think they could end up surprising a lot of people. Of course, we still love the Washington Wizards as well. That's my hometown team, and I spent a year in LA for grad school. I was studying math, and I claim the Lakers as my hometown team as well. And we're from the Bay Area. We've got some Golden State Warriors fans, I'm sure. But we're happy about the Memphis Grizzlies. I was trying to see if you could use the AI tools to decipher our hints, and you actually could not. So the AI technology has still not caught up to humans on the internet. So it's pretty amazing. A lot of people did get the Grizzlies thing, and GPT-4 was not. So you should feel very proud of yourselves.
0.1 humans, 0 chatbots. Love it. But yeah, I was very impressed to see, because they were kind of doing that. I was like, oh, that actually kind of makes sense. We'll see what happens. And here it is today. We're coming up on the 30 minutes we have scheduled for this, and I know your time is really important. Appreciate you joining in. I want to know if there's any kind of final words, anything that maybe we haven't talked about that you're super excited about, any of the stuff we have coming forward for Robinhood. Obviously, that Hood Summit coming up October 16th to 18th. Looking forward to that one. Anything else you want to leave people on the spaces?
Well, I would just say that, we've got a lot of amazing product designers and artists and engineers that put a lot of care into their craft, making the products as simple and clean as possible and useful. And, we're all paying a lot of attention to, X and social media and Reddit. So please keep the feedback coming and keep the feature requests. And we're going to work to make Robinhood the best financial platform for you. I think that, if I'm successful, if we're successful, in 10 years, Robinhood should be the place where you hold all of your important assets and where all of your financial transactions go through. And tune into the Hood Summit. That's going to be going live on X as well. There's a live stream on X, and we're looking forward to sharing some cool stuff with you all next month.
I'm very much looking forward to that event. Vlad Tenev, the CEO and co-founder of Robinhood, I really appreciate you joining us on this Spaces and sharing so much information. I know a lot of people got a bunch from it, and I hope we get to maybe do something like this again. But I appreciate you joining in and sharing so much, and I'm excited to see everything that Robinhood does going forward.
Thanks, guys. Thanks, Evan. Thanks, Gav. Thank you for the listeners. I see some familiar faces over there, so appreciate you all coming and listening.
Yeah, I know Amit did a fantastic interview with you a little bit ago, and there's a bunch of other people down there. So shout out to our friends.
I'm a big fan of Amit. I see Jody Doge as well. Hi, Jody.
Ooh, that reminds me, we didn't get that. I wanted to ask a little bit about crypto, but there's just so much amazing stuff that we have going on here. But we will talk about it maybe in the future. Shout out to everyone for coming in and supporting us and everything we do. Vlad, I appreciate you making this Spaces so fantastic. And we will catch you all on our next one. Appreciate you
guys.
Have a great one, team. Thank you for this.
Thank you,
Be
Vlad.
well. See ya.
See ya. This, for anyone who came in a little bit late.
All right, cool. Boom. Didn't get anything that different than what we've already known. The Hood Summit's coming up. We know that's going to happen. Kind of officially confirmed futures and index options, even though we already knew that. And then the Memphis Grizzlies thing. Look, I think it's a good idea. I forgot they were part of the Washington Wizards patch before. I guess that sponsorship had ran out, so they had to get a new one. And because their marketing team works heavily with that gold card launch and the NBA, and they run a lot of TV ads. I was watching the finals. There was a lot of Robinhood ads during the playoffs. It makes sense for them to continue a good relationship with the NBA, even if they don't really care about the team that much that they're sponsoring. So just being part of that NBA ecosystem makes sense. I'm not blushing, dude. I'm not blushing. Goodness gracious. I wish I could go to the summit though, dude. I'm going to be in India. I'm going to be gone. A lot of stuff is happening in October that, unfortunately we're not going to be able to go to, but India is going to be exciting. I can't wait to go back to India. It'll be some good content from India as well. You guys will get to see a bunch of, pictures of my, my grandparents' house and all that stuff and videos from India. Probably my uncle will join some of the streams. My uncle watches my streams every morning. He's big into investing. So it'll be good content, but yeah, that summit will be important. I think it'll be good. And, as long as they keep executing, we should see some continued growth and momentum. All right. I think that's it. We talked about pretty much everything today. So on Palantir, again, we are still trying to figure out what's going on. Now you have an official down 2% on Palantir. Lennar after hours is down 3.64. So market didn't love the earnings. We'll go over that on the market open, beat on the top and the bottom line. Maybe there were some specific parts of guidance that the market did not like. Hood itself after hours, 2286, up a little bit at the S&P 500, still at 570 after hours. The big thing was Palantir falling 2%. One piece of news that I'm getting is these are secondary sales. This kind of rumor of a block sale of 10 million shares by Morgan Stanley. Apparently, this would be employees selling via Morgan Stanley. That's what a block sale is. That's what I'm reading right now. I don't know if that's exactly true or not. Again, we don't even know if this is real. This is just a rumor. But if employees are selling about 10 million shares priced from 34 to 36, that's probably why the stock is down 2%. Now, granted, 10 million shares is not, it's 2 billion shares outstanding. So I don't think 10 million is going to be that big of a deal. But that might be the news that's getting it down. Again, going back from the little conversation we were having before we got into the VLAD thing, the prices are elevated for Palantir. Everyone can acknowledge that. It's easy to acknowledge that. The company's valuation is incredible at this point. The momentum they've had this year has justified it, in my opinion, but that does not mean it's an amazing buy at these levels over the short term. And when you're selling to protect some profits in the short term. Otherwise, no one would ever sell if you're only concerned about the long term and you believe the stock's always going to go up in the long term. So I think it's reasonable for employees to sell. I think it's reasonable for insiders to sell. I think it's reasonable for you guys in the chat to want to sell or sell covered calls. I think everything from that perspective is reasonable. And I tried to never blame anyone for selling anything. But it is important for the people that are buying it, expecting it to go to 45, to just remember, this is not going from 20 to 25. This is not going from 25 to 30. This is not going from 15 to 20. This is going from 35 here to 40, which is a lot harder. And then 40 to 45. It just gets harder and harder and harder the more the valuation creeps up. And it's harder for that to happen if the valuation is creeping up on basically no news. And from this 30 to 37, there hasn't been crazy news. There hasn't been earnings. There's been a couple contracts here and there. And there's been AIPCon, which is great. But AIPCon is not like, a reason the stock should gain $10 billion in valuation, right? So you just got to be ready for the volatility. And if you're here for the long term, then it probably wouldn't matter too much. Cool. All right. That's it for me. Thank you, everybody. If you want some more of me, I will be, Thomas, I hate you so much. I'll be on Twitter Spaces. Thomas says 2 seconds after the stream ends, Mom, the girl I like noticed me. You know what's funny, dude? My parents don't care anymore about the whole social media thing. Like when I sent them the video, I'll show you right now. When I sent them the video of the Karp video at AIPCon, they were like, "Oh, cool." Dude, they're desensitized to it. They don't care anymore. Look. My mom was like, "Hey, did you get to meet Karp?" I sent the video. See this? Sis. Oh wow, Mom. Wild, crazy. I was there. And my dad didn't even respond, dude. My dad didn't even respond. My dad, it's just they don't really care anymore, dude. They don't really care. Dude, my mom sent me this podcast, bro. This fucking podcast. She wants me to watch it so badly. She sent me this podcast. It's about muscle building or something. See this podcast? And then yesterday we had one of the biggest days in the finance media business, which is JPOW. We had I think close to 4,000 people on the live stream when JPOW was announcing the rates. And so she comes home. She's like, "Hey, dude, listen to the podcast." I was like, "Mom, it's a little busy. There was 4,000 people. We had to get through the news. There was some important stuff that was going on." She was like, "So why didn't you listen to the podcast?" I was like, "Dude, I was big." So they don't care, bro. They don't care. They don't give a shit about what's going on social media wise, or if Vlad mentions me. It's just back to business. It's why didn't I take out the trash? Literally, it's why didn't I take out the trash? So that's what we got going on there. But I'll be back tomorrow, 8:45 a.m. Twitter Spaces, I'll be live on in 20 minutes. So if you just go to my Twitter, you'll see the Spaces, talking tech with a bunch of folks. Not going to be any crazy new topics. So if you kind of heard the market open, market close, you don't need to be there. But if you want to tune in, get some other perspectives, then feel free to join. And that's it. That's pretty much it for me. Dude, the Talk Tua podcast is crazy. Remember that Hawk Tua girl that went viral? She has a podcast under Jake Paul's brand. She's getting some crazy guests, and she's really taking this opportunity to do her own thing. So if anyone has seen that podcast, that is American capitalism. That's taking your 15 minutes and you're fucking going for it. And I think she's gonna be around for a while, dude. A podcast is one of the easiest ways to be around because if you have a good guest, as long as you have some personality, if you get the top tier guests and you have some personality, your podcast can at least survive, right? So the guest is 99% of the challenge with the podcast. That's you could be the most intellectual speaker or funny person on the planet, but if you don't have a guest that already has some credibility or some brand awareness, there's just no reason for people to listen to a podcast, especially if you're asking them to listen for an hour, 2 hours or something. So, if she keeps getting guests, then I think she'll keep winning, and we'll see what journey it turns out for her over the next few years. Rumor has it that Michael Saylor, dude, her and Michael Saylor talking about Bitcoin would be crazy. That'd be wild. All right. That's it. Thank you, everybody. Appreciate it. 8:45 a.m. I'll be back tomorrow. We'll keep going. And tomorrow's Friday. TJ will be on at 10 a.m. We'll take a look at the public portfolio. We made some moves today already. And yeah, we'll keep going from there. All right. Thank you, everybody. Love you all. See you guys tomorrow, 8:45 a.m. for the market open. Bye, everyone.